many different kinds of scenarios. We have 6 or 7 at every FOMC meeting. They're often the topic of discussion among governors and at the meeting. We have not taken the step of using them as a public communications device. And that's a big difference. So that's one of the things we're going to be talking about this fall. We will wrap up the first part of our framework review, which is the consensus statement, our monetary policy framework, we expect to by the end of the summer. And then we're going to use the fall meetings to look at communications ideas, and that's one of the ones we'll look at. I will say it has a lot of appeal and a lot of questions, and so my expectation is if we're going to do something in that area, it's going to be putting a toe in the water and not just throwing ourselves in, over Niagara Falls on it. So I can imagine a situation where we would try that in a particular circumstance, but for us, we're just going to do the work and understand it as many other central banks are doing
now. In our case, we use the scenario analysis in our risk management section as a kind of representing the tail risk. But I have to read the ECB report, but if we have to move that section into the more forecasting section for public communication, I wonder whether it's going to be easy to get some consensus, which scenario we have to do it among our probably members in the monetary policy meeting. So because that scenario and the underlying assumption may be much harder to communicate, to agree among the members. And also, it's specific to us, but how I can differentiate the previous approach of risk management section to the forecasting that I have to think over what we have to do.
So I think 2 things I would add, and it's very much in the same spirit as colleagues. One, we introduced 2 scenarios in the May round and in the May report. For me, they were very useful. They were either on either side. They weren't symmetric, by the way, but they were on either side. For me, they were very useful in terms of my decision-making because they helped me to answer the question, given the uncertainty. If I'm wrong in my judgment, how wrong am I going to be? Do I think I'm going to be? And what would be the consequences of that? And what would we then have to do to deal with them? I mean, is it manageable? And that was helpful. And then I think the question, coming back to what Jay was saying in terms of public communication, I mean, this is the big step, I think, and it is challenging. I'll tell you why, because I say this quite a lot. We make a lot of conditional statements. You may have detected this in all the many interviews you do. And I'm not making a personal comment now, Francine, but a lot of those conditional comments get immediately translated as unconditional comments. It's sort of life.
We're quite careful, but
no, it's not personal. This is the general point. And so the reason I say this is that if we, and that's about the central case, by the way. So if we introduce scenarios, that's a message to us that you're going to have to do this very carefully in that world, because to get the point across about, there is always a range, there's always uncertainty, there is always risk. How you calibrate those and how you, as Jay was saying, how you communicate those publicly is critical, but pretty challenging, frankly, in that environment.
Governor Ueda?
Yes, we also carry out many simulation exercises about scenarios, but we have not, as far as I know, published them. We do discuss in our quarterly reports qualitatively what risks we have in mind. Mm-hmm. On top of that, I would say, in a very rough way, we are carrying out something like a risk management approach to monetary policy making, which is probably a bit similar to what Christine was talking about yesterday. I can't come up with a good example, but so risk scenarios, thinkings about tail risks, sometimes do affect our monetary policy making.
Can I ask you all about